All right. Hello, everybody. Thank you for checking out our webinar this evening on Home Buying 101. A very Gen Z millennial approach on buying your first home. We're just going to give this another minute or two here for people to trickle in. You should be able to see a screen called Home Buying 101. If anyone can't see it, please toss it in the chat, and then we'll find out shortly. And no one's talking in the chat, which is a good sign, because that means everyone can see. Simon, how you doing today? You feeling good?
I'm good.
Nice. Ready to put on a lovely webinar for our lovely audience here?
Yes, well, yeah, should be a good time tonight, this evening.
Yeah, you guys are tuning in at a great time. I got a peace sign. That's lovely. You guys are tuning in at a great time. Spring market is going up shortly here. And now is a great time to be inquiring about home buying, for sure. Right before the people who are looking to sell are listing their house at any sort of time, as well as before too many buyers get in the market. I'm just going to give it 30 more seconds here, and then we can get started with Simon. And in terms of questions, if anyone has any questions, we are going to hold off for questions until the very end. So toss them in the chat whenever you'd like, and then we will get to them towards the end of the webinar. We have a whole section for it, and then we'll tackle all questions then. Going to give us a few more seconds here. Just a couple more people trickling in for our registrants. Hello. Sweet. I think now is a good time to get started. What are your thoughts, Simon?
Great. I'm ready to go.
Sweet. Well, thank you guys very much for tuning into Home Buying 101 today. This is presented by Simon Royer Realty, right over here, as well as myself, Mortgage Guy Bryan. Many of you know me as Brian Braga. So we are very excited to bring you this webinar today.
So I'm not going to go through every little point, but we're just going to kind of hit the major points. So basically, we're going to describe who we are. We're going to talk about the RICO guide, building your dream team, what's a mortgage, what determines your budget, and the home buying process, and how do you qualify for a mortgage. There's also how to save for down payment, closing costs, and any fees associated with closing. So if you don't know me, I'm Simon. I'm a full-time realtor with Remax Icon Realty in Waterloo. I proudly serve the Brantford, Cambridge, Kitchener-Waterloo area. I specialize in first-time home buyers. I like to be as transparent as I can, no BS approach. I try to make it as easy as possible for everyone to understand, and I like to have a little fun along the way. So I'm Simon.
And for those who don't know me, I'm Brian. I'm a full-time mortgage agent. I specialize in first-time home buyers. I'm really passionate about making sure you know what's going on with your mortgage. A lot of things go unsaid, and a lot of people don't fully know what they're signing. I fully think that's a problem. And I call myself a mortgage-free expert as well, meaning that I help you pay the least amount of interest as possible throughout the life of your loan.
All right, so now we're into the meat and potatoes here. So one thing that I always like to do when I'm at an open house, this here is called the RICO guide. And basically what it is, it kind of describes the home buying process and how consumers are protected and how they work with their realtor, their real estate agent. So it just kind of details everything, the process and how you're protected. And if you have any questions or it kind of determines everything in there. So I always like to give them out when I'm first meeting first-time buyers, just so that they kind of understand the process.
That's very good that you're handing these out so people really are in the know for their whole journey, Simon?
Well, what it is RICO, when they did their last update, they wanted things to be a little bit more transparent. So they created the RICO guide.
Awesome.
So you've kind of heard me mention earlier about building your dream team. So basically, it's just your team of professionals that's going to be working with you. Some of these you need them right away, and then others you can kind of do as the process goes. So, you need an awesome realtor like myself. You've got your mortgage agent, which, you've got Brian over here. And then you have your real estate lawyer and your home inspector. Now, these, you can pick your lawyer kind of towards the end. I have some good partners that I work with. Same with the home inspector. I always suggest working with, I have a few professionals in my that I refer out. So
we're getting into the thick of it with the portion that I like to get started with right away is getting pre-approved. And pre-approval is really essential as a first step into the home buying process, just so you really know your budget. It's important to get in there, talk the numbers, because it would be so unfortunate to go looking at a $800,000 home just to later find out that you can only afford $600,000. You'd be devastated, especially after you fall in love with a home. So getting pre-approved just really make sure your balance or your budget is really in place and you know exactly what you can qualify for, as well as at that stage you can also lock a rate, which is a great portion that we'll be talking about later. And this is a good joke that Simon put in here. Buying a home without a budget is like going to the grocery store hungry without a list. You'll most likely overspend and get into some trouble. It's really key to start off with a pre-approval, and it's an essential first step as part of the home buying process. And for a mortgage itself, so a lot of people don't know what a mortgage is. When I was growing up, this was not taught in school, and I didn't learn until later in life. And the easiest way to put it, a mortgage is a big loan. It's a big loan that uses your house as collateral. If you don't pay your loan for some reason, the bank can then sell your house in order to get their large loan back. So it's a big loan that you are taking out in order to purchase a house, and they use your house as collateral. Determining your budget, and this is where we're building in your pre-approval, there are four main factors we are looking at here. The largest one, I would argue, is income. And this is where we take a look at how much money you're making in. And we have to take a look at your gross income and essentially using a couple of ratios that are down here. They're called GDS, TDS. We have to make sure that your gross income, so your pre-tax income, isn't going further than 39% towards a mortgage. So your shelter costs can go over 39% for your mortgage, for your principal and interest. And when we take into account other debts, so that would be car payments, student loans, lines of credit, credit card, it can't go over 44%. So income is a really big factor based on how much of a mortgage you can actually qualify for. Your down payment would add on top of that. So if you can qualify for a $300,000 mortgage and you have $100,000 saved, then you can qualify for a $400,000 purchase. Your credit, a lot of people have questions about credit. And generally, if you're above 680 and you pay your credit cards on time and you don't have any lates, you're relatively free. Great credit is considered as long as it's over 680 and you're not making late payments. And the rate does play a part, but in terms of qualification, it doesn't move the needle too greatly. It's more so for the payment where the rate comes into effect. But these are the factors we use when determining your budget for your pre-approval. For the process itself, this is the whole process for buying a home. So we start off with that pre-approval. We take a look at your documents up front. We take a look at your credit bureau, and this is considered a soft check. It's not a hard check. And then we lock a rate. It's important to note that your documents only last about 30 days. Same with your credit check. So if you find a home after those 30 days, we need fresh documents. And your rate lock typically lasts around 120 days. After that, we go with Simon and we go find a house. We go house shopping. Once we put in an offer to purchase, we can add in their condition of financing, which you would get into the thick of when you're working with Simon and myself. And once we have an accepted offer, we shoot it over to the lender. If you're putting it less than 20% down, then your mortgage has to be insured. So it goes to the insurer as well. They also need to approve it. And if the lender requires a property valuation or an appraisal, then we'll go get it appraised as well. And after those factors are taken care of, then it goes for a final approval through the lender and we're into closing. Saving for a down payment, there are a few different ways we could save here. There's the traditional stick it in a piggy bank and forget about it for your savings. There are very specialized programs, First Home Savings Account. Love it. Cannot get enough of it. Open an FHSA, please. So FHSA, that's a First Home Savings Account, unique and introduced this year. There's also a tax-free savings account, the home buyers plan that's alongside the RRSP, and these are specialized programs that are designed to help first-time buyers get into the market, not necessarily TFSA, but a lot of people borrow from their TFSA anyways, as well as you can receive a gifted down payment from an immediate family member as well.
So I'll go over some of the first-time buyer incentive and tools. So Brian did mention the FHSA, which just to kind of explain it a little bit, it's almost as if your RRSP and your TFSA had a baby. Basically, it's tax deductible and tax-free on any profit that you would make on your savings. There's also the home buyer plan, which you can withdraw up to $60,000 from your RSP tax-free and put it down towards your down payment, but you do have to repay it up for 15 years. You have up to 15 years to pay it back. There's also the land transfer tax rebate, which is usually $4,000 per couple or $2,000 per first-time buyer. There's also the GST, HST new housing rebate that's paid on new construction. And then local incentives. I love these, especially if you don't have a down payment. These local incentives, so you have the Be Home program in Brantford, and you also have the Affordable Home Ownership Program out of Waterloo region. So essentially, if you can qualify for a mortgage, like your credit is all great and there's no surprises, you have great income. There's some stipulations about income and the home, like the final purchase price of your home, but they do give you up to 5% down that you can use towards your purchase as long as you've lived in the area for a year. So if you've lived in Waterloo region and you've been renting, you do qualify for this program. And what happens then is you can live in your home for 20 years and not have to repay this loan. Now, if you do sell in the process, like in the timeline, you do have to repay that loan. So basically it's 20 years of interest-free money that the region has given you towards your down payment. So definitely something to look at if you don't have a down payment, and it's a good little tool to have.
I really agree with that, Simon. This program itself, they have a couple throughout the region. I know Niagara has one too. Guelph has one as well. One thing about Guelph too is you actually don't need to live in the county of Wellington in order to qualify for that one too. But each of them have their own stipulations and they're all different as well. So if you have some questions about a specific region, be sure to reach out to Simon and myself as well. In terms of the two types of mortgage that we typically talk about with a lot of clients, there are fixed mortgages and variable mortgages. For fixed mortgages, you have the option of 1, 2, 3, 4, and 5-year options for your term, with 3 and 5 years being the most popular. And for variable, you have 3 and 5-year term options, with 5 being the most popular, mainly because only about 2 or so lenders offer 3 years. It's not very common at all. For fixed, one of the main benefits is it is incredibly stable. You know exactly what your payment is for the next 3 to 5 years. You don't need to fret about if your payments are going to go up or down. It's very stable, it's very easy to budget around, and it's very first-time homebuyer friendly. And this is typically where I lean a lot of my first-time buyers, just because it gets you familiar with what a mortgage payment may look like, especially if you're going from a place where you didn't have a payment before, or you're renting previously and now you're going into a mortgage and it has a few more fees. Having that fixed rate is almost a sense of comfort where you know exactly what your payment is, you know what you need to make for the month and what you need to clear, and you don't need to sweat about anything else. For a variable rate, variable, like the name says, is a rate that changes. So there are 8 Bank of Canada rate announcements per year. And when you hear a bunch of people in the housing industry talking about rates going up, rates going down, they're talking about the variable rate. It's the Bank of Canada, they make 8 announcements, and they decide whether the rates are going to be going up, going to be going down. And this has one goal in mind, which is just to mitigate inflation. And with that, housing is affected in the meantime. So variable rates follow the the Bank of Canada rate announcements, and there are two types of variable rates. One is adjustable, where your mortgage payment changes. So if the rates go up or down, then your payment is what goes up or down. And this is the most common because it's dependent on the bank that you go with. And there's a variable where the mortgage breakdown changes. So the percent that's going towards interest changes, but your payment stays the same as well. This right now is the cheapest on the market just because we had so many rates drops recently within the last year because we had very high rates previously, where the variable rate is the cheapest on market right now, followed by the 3-year fixed, followed by the 5-year fixed. And this is ideal for those who can handle risk. The thing I say to most of my first-time home buyers is if you are not being able to sleep the night before a Bank of Canada rate announcement, maybe the variable rate isn't for you. If you're losing sleep wondering if you'll be able to afford your mortgage this month, then you might want to consider the fixed rate option. There is an option where you can switch your variable into a fixed. And to dive a little bit into that more, let's say you take a 5-year variable rate and 3 years down the line, you see that rates are going to go up. Then at that point, you're going to be looking for a 2-year fixed mortgage in order to bridge the gap for the remaining 5 years that you were looking into.
All right, well, here's the fun part. Now that you've been pre-approved, so this is where we start looking at homes. So, I mean, if you know me, like, you know that I like to have fun along the way. You know, I like to make jokes and, you know, sometimes they're funny, sometimes they're not. But anyways, that's me. I like to have fun along the way. So plus I'm kind of klutzy sometimes. So, you know, if I bang my head or, you know, something like that, you'll probably end up laughing at me. But so this is the fun part. So once you've been pre-approved, we'll start booking some private tours of homes. I'll break down the market value of comparables and kind of show you kind of like things that I've noticed that are kind of red flags once we're touring homes. But one thing I do suggest, even if you're with or without me, check out some open houses. Open houses are a great way to kind of see what's happening out in the market, kind of figure out what kind of home you like, what your must-haves are. It's kind of a fun way to kind of go in. It's low pressure that you can just kind of tour at your own pace. The only thing I suggest is if you've ever been to an open house before, the agent's going to ask you to sign in or whatever. So if you really don't want to get them to bother you or hound you, just tell them you're working with someone. Just tell them you're working with me, myself. You can say you're working with Simon and they'll leave you alone. But I mean, if you do want to work with me, I'd be more than happy to represent you. So, but yeah, if you don't want to get bothered at the open house, just let them know you're working with an agent and they'll leave you alone. So crafting offers. So basically, once we've narrowed it down to a property that you like, we'll start basing our pricing on kind of like recent sales in the market. We'll include like conditions like financing and inspection. I mean, I always like to add these for first-time buyers. It just kind of gives you that feeling that you didn't overpay, or, you know, that things are correct, that, you know, even in the house that you purchased, you kind of know what potential issues could arise down the road. So a home inspection isn't necessarily a renegotiation tool, but what it is basically is you're coming into this new property, you have no history, but now this home inspector will point out things that could come up down the road so that you're not blindsided by, you know, a roof that needs to be done in 2 years or whatever. They give you that information so that you're ready to go. So for first-time buyers, I always recommend it, and I always suggest that we add it into our offers. So, and then once your offer is accepted, I'll book the home inspection for you. And then we'll go through your financing with Brian or your mortgage agent. And then we'll review all the closing documents and get you ready to close. So closing costs, I'm sure everyone's heard about this. So we usually say to set aside about 1.5 to 3% of your purchase price. And that's just, you know, there's always unexpected fees that come up. There's your land transfer tax. There's the lawyer fees. So yeah, so always keep some funds aside, just so that when it comes time to move, there's also like moving costs and legal fees and that kind of stuff. So yeah, so final thoughts, 2026 is shaping up to be one of the best environments in years for first-time buyers. As you've probably heard, we're in a buyer's market, tons of inventory out there, a lot of opportunity. So now's the time. You can buy with confidence, negotiate, and we're adding conditions again, which is great. So instead of renting, why not build your own equity? Jump in, and when you're ready, when you're comfortable to start the process, let us know. So this is all for what we're here for today, is the buyer's guide. So if you want, you can scan the QR code down at the bottom, and you can download my buyer's guide, which will give you more detailed information about our presentation today. So, is anybody ready to start? You now have the knowledge and the framework to navigate the home buying process with confidence, take control of your future. So if you're ready to start searching, let's book an appointment. Let's go and do a free, no pressure buyer strategy call. Just scan that QR code and we can book a strategy call together.
I'm going to let this be on the screen for like a quick minute, so that way the registrants have enough time to scan that. Sweet. I'll move on to the next. And then same for myself as well. It's just starting the conversation. I always start my calls with my first-time buyers. It's just a phone call, and we call it a discovery call. We just have a conversation. We go over the whole process, answer any mortgage-related questions that you might have before we get into the thick of housing. And if you want to book a discovery call with me, then you're more than welcome to scan this QR code, and then it goes right to my calendar link, and you can book in a time for yourself as well. I'm gonna let this one hang out too, in case anyone else needs to sign up for the QR code. Sweet, and then that was our presentation as well. Thank you guys very much for listening. And we do have a section set aside for Q&A if anyone has any questions in there. And if you want to toss it right in the chat here. So we have a question. My biggest worry is that I'm leaving money on the table by not knowing about this smaller thing like local incentives. What is the best way to make sure that I have a complete understanding of all the benefits available to me? And if it's reaching out to knowledgeable folks like yourselves, how far ahead of time should I be reaching out? Great question, Lucas. So actually, Simon, do you want to take this or do you want me to?
Doesn't matter. I mean, what I would probably do is I'd probably get you in touch with Bryan anyways to see if you qualify for a mortgage first, because you need to be able to qualify for a mortgage before you can look at these incentives. But Bryan would have the full list of all these incentives as well. He has access to all that information.
Yeah, great insight. You have to be formally pre-approved for a lot of these incentives. And truth be told, for a lot of the local incentives where they give you a down payment, if you can qualify on your own, I always recommend it if possible, just because if you do live in your house for 20 years, then yes, the loan is forgiven. But nowadays, that's highly unlikely. And I tell everyone who's going through this program that you're going to be paying it back. Just get it in your head. We also have another question here. I can't scan the QR code because I'm watching this on my phone. Can you email me both your contact information at the end? Absolutely. We'll be sending out this whole PowerPoint to all the registrants as well. So check your email. This is also being recorded, so we'll send out the recording too. So that way you can rewatch this in case you want to take a look at it over again or in case you missed anything. An additional question, how long does the pre-approval process take? Great question too. The main thing that takes the longest time is collecting documentation. So I need a lot of income documentation, some bank statements, depending on the type of income that you need. And oftentimes we get HR involved, who we need to go to for a job letter or sometimes the pay stubs. And sometimes they could take a day or two. So getting the documentation is the longest part. And once I have all your documents in hand, and granted, sometimes I need to go back and ask for the clarifying tax documents, then it would be around 24 to 48 hours, sometimes quicker, depending on how busy the market is right about. But 24 to 48 hours once we have all the documentation from start to finish, based for first call to on average how long people take to get documents, I'd say about a week or so.
Okay, and then just to kind of go on that a little bit too. Once we have the pre-approval and you start searching for your home, it can actually take a while. We usually say about 2 to 3 months, depending from start to close. But it also could go pretty quick as well, depending. I mean, I've had clients that find their first home on the first visit, and sometimes it's a quick close. So the whole process can be done within 60 to 90 days, usually from start to finish. So.
Nice. Another question: how is the spring market looking overall? I'm excited to start my journey. Sweet, Simon, you want to take a lead on that one?
Yes, I'll try. I mean, I don't have a crystal ball. Things were kind of starting to get a little bit warmer since the weather's been a little nicer. But now with what's happening in the world, in the US and stuff, I'm not sure what's going to happen there. But so far, it seems like we're ready for a spring market. Maybe not a strong one, but it seems like it's warming up a little bit than it was over the winter. So I'm still seeing a lot of signs out there, lots of inventory. So if you're ready to jump in, let's start looking at homes, because there's some good opportunities out there.
Yeah, I agree with the strong opportunity as well. A good rule of thumb is like, I'll start getting busy first, and then they'll be going over to Simon, because a lot of times they're getting pre-approved. And I have a fair amount of people coming through my calendar getting pre-approved right now. And a lot of people are saying they're taking their time, and they're willing to wait. They're willing to see how the spring market goes. But the more people we have that are willing to see how the spring market goes, the more buyer buildup we're going to have, and then that's going to create a stronger demand as well. So spring market's looking pretty solid so far, and as the time goes on too, we are getting busier. So yeah, I'm feeling good for a good spring, I'd say so. Any other questions for anybody?
I have a question. How did you guys like this presentation today? Did you find it informative?
Yeah, we would love some feedback as well. This is our first, and we will be having future ones as well. Nice. Thank you for the claps and the thumbs up. I will be planning on making one on credit and how to build your credit as well. So please stay tuned on how to build your credit and how to strengthen your credit journey for a webinar in the future. And Simon, do you have any events going on in the future that you want to plug shamelessly?
I'm sure there'll be more, but
I
haven't planned anything else yet, but
Sweet. Well, thank you guys so much for joining today's presentation. We really appreciate you taking time out of your evening to sit here and chat with us. And then please keep an eye on your email. You will be getting a copy of this presentation and the slide deck. And have a great rest of your night.
guys.
See you, Simon.